It's hard to know whether Woolworths' share price dropped 6.6% because Brad Banducci quit or because today's half-yearly result missed expectations. Profit margin increased and supermarket profit lifted 10% to $1.6 billion, supporting those grumbling about gouging, but sales are weakening. Also, the company did muck up the CEO's exit, both from the job and Monday's interview. And if Four Corners was listed on the ASX, its shares probably would have gone up today. The share market as a whole went down following a fall in New York, while in Hong Kong and China today, traders came back from the New Year holiday full of good cheer and buy orders. But the iron ore price tumbled 6.1% to a 3-month low because of concerns about Chinese demand. China cut interest rates today by 0.25%, but economists don't expect that to result in more housing construction. And the Aussie dollar went up after the Bureau of Statistics reported that wage growth in the December quarter was 0.9% and 4.2% for the year, which means that wage growth for the year to December was higher than price growth. 4.2% for the wage price index, as it's called, and 4.1% for the consumer price index. Now, there's only a B's payslip in it, but we haven't had real wage growth for 2 years. The Reserve Bank had forecast that wages would grow 4.1% in December, and today's minutes of their last meeting said that that would be okay as long as productivity picked up. So now productivity has to pick up just a little bit more to avoid another rate hike. And that's finance.